All right, good morning, everybody. Happy St. Patrick's Day. How's everybody doing? I was going to play some. SiriusXM has a St. Patrick's Day channel, but I realized that I'd get dinged on copyright violation, so I didn't want to do that. And so I didn't turn it on for you. But it's a pretty good channel if you got SiriusXM access at all. They've got St. Patrick's Day music all day long on channel 28, special channel for the day. So anyway, got my green hoodie, my green shirt, my green monster that looks like special effects right now. How's everybody doing? Pretty good day. I mean, ES pulling back a little bit. We'll talk about the OPEX. $2.9 trillion of options expiring, about 1.7 of them as the market opens, and then another like $1.2 trillion as the market closes today. Crazy numbers, and I'm sure that doesn't even consider all the zero-day options that will be traded today. Probably going to blow that number up to over 2 trillion by the close today. Crazy stuff. Anyway, let's just jump into it. So it is raining here today. That is true. It's about 55 degrees and rainy here in not so sunny Knoxville, Tennessee. Not sunny like this. So, all right. Anyway, we've got the my monster still look, goes right through me. Special effects. Anyway, all trend give loss if substantial risk of loss. Past performance not necessarily indicative of future results. This presentation, intended to be informational, educational, and fun, is not a recommendation to buy or sell any financial instrument. If you desire that personal financial advice, consult a financial advisor. Yeah, so let's jump into some of the stuff. And I built a whole chunk of stuff to talk about here. So we've got future slide is $2.9 trillion in OPEX clashes with broke bank bailout bash. So kind of crazy. So the white monster. I drink a white one occasionally. Anyway, I like to rotate. I can't drink the same flavor all the time, Patrick. So above 4K they sell. Goldman's derivative guru Garrett points out the dealers are long upside strikes. So expect decent selling above 4K. I think we saw that in the futures this morning. Right as soon as it spiked up to 4,009, we started getting selling. So the dealers will be long in gamma. Be careful. They're going to sell as it breaks 4,000. And that's what we're seeing right now, pre-market. This is what I'm worried about, though. This is on the futures right here. We got that little spike up and then selling. If we get below this level right here, about 39.45, this is on ES. This is the futures. They run about 30 points higher than the actual S&P 500. So we're watching for this right here, about 39.45, 40, 45-ish, plus or minus just a little bit. We don't want to see it break below this high that it made right back here. This was yesterday's range, so that was, late night 2 days ago. We got that dip yesterday. We start breaking below that level, though. This sets us up for this because this was a three-wave type move up into this, a three-wave move type move down into this, and sloppy up into this high right here, stopping at where this move up and this move up are the same right there, 39.99. Basically, get that one little spike. One little spike does not make a new trend, and getting the pullback. So we need it to hold right in here. The 618 of that whole move up from here to here, down here around 3,900. We could see that hold, but I don't know. I think we might get continuation down if we start breaking this level. It's the first caution level. We start breaking 3,900. That's the second caution level. This target would be down here around 37.94. Just watch out, all right? And we could get the extension all the way down. Is 37.40. This is the bearish case. If things just go horribly, just starts breaking down, that's kind of the levels right there I would expect before we see the next bounce. So I am still somewhat bullish because we're holding this trend line. That's the big purple downtrend of the highs from last year. We are on the upside, holding that, even retesting down in, retesting is okay, but we need to keep holding this purple line. So far, we're struggling with it. Struggling, we can't stay below it. And yesterday closed above it. These are 3-day candles. So I'm kind of excited there. Thought I'd roll through this article. I started out with the screenshot of the headline here. So rolling down through here, we see options dealers. That's what we're looking at. We had discount window borrowing. This is like a big red short me flag. If banks start partaking in this, which we just hit the highest level, this was the great financial crisis. This was back in COVID times. This right here, we just hit the highest level of the discount window borrowing. This is just overnight borrowing basically, but we hit that highest level we've ever seen in this discount window borrowing. And supposedly they only had about 1.25 billion available in it, but apparently we hit $125 billion available in it, and somehow they borrowed 152 billion, almost 153 billion. I don't know how it works, but anyway. Banks that partake in that get automatically put on a short seller list, and there's notifications that go out to people holding large accounts there that the bank that partakes in this is unstable and could go bankrupt, and people should consider moving their money. So this is this is a big red flag here. This is not positive, even though this is liquidity pumping into the market. This is not positive. This is the stuff more bank runs are built on right here. So highly cautious. As I've said all week, kind of this bank run thing, this bank crisis is not over yet. And there are systemic risks that may cause the Fed next week to drop rates that we're not expecting. And everybody says, oh, the ECB raised rates 0.5 point. ECB was running at 2.5 to 3 on their rates, and they jumped up to 3 to 3.5 on their rates. We're all the way up at like 4.75. So we're way ahead of them on the rates. All right. Just keep that in mind. Like, Europe is not the US. US is not Europe. Rolling on down through here, lots of garbly gook. Here's market snapshot right there. Overnight news. If you're a news hound, there's like 13 major news headlines that hit overnight right there. You think news moves the market? There's probably bullish news. There's probably bearish news all through here. I see BBG showing up quite a bit. So Asian Pac, Asia and Pacific area, more news coming out there. European news, FX news, fixed income news, commodity news, geopolitics. Here's the calendar for today. New, financial news coming out, and then Jim Reed concludes overnight wrap up. So if you think this whole thing works on news, there's like gobs of crap that came out all night long that you probably never would hear. You just probably would never even hear it on mainstream media here in the U.S. So don't think that the whole U.S. market just moves on what makes it on the mainstream media. Chart patterns, technical analysis. That's what I do. It just ignores all the news. So I might remind you that volatility, S&P 500, seasonality. This is averaging 20 years. Right here, we have a giant spike mid-March, and that seems to be what we're getting on the VIX. Seasonality-wise, we could expect a drop and see a lower price than we saw January 1st on VIX here by May. Then we get a little volatility spiking up, and ultimately it drops down into June. For those that were paying attention to my SVXY trade, this is what I was taking advantage of right here. This expected move down. That's why I bought calls on SVXY. That's short VIX ETF right there. That's kind of what I'm trading on. Yeah, this is just a 20-year average. So it's one of those things that is it going to happen again? Well, we're at least going to return to somewhat calm. We're not going to stay elevated through June. That's highly unlikely that we stay all of April, all of May, and into June. I bought June calls on SVXY, like $60 strike. Unlikely that we just stay elevated on VIX. So probably going to pull back. Yesterday saw a significant pullback, but this morning seen a little bit of ramp. And then S&P 500, usually we see it return back to zero for the year in mid-March, and then we see it rally up through May. Then sell in May, go away. We see some sideways and some chop all the way through July, and then we start getting a little movement. Then we come back again through August and kind of flat, and then we actually do this into the end of the year. So this is just the historical pattern. That's your 8% gain historically in the stock market right there. And just keep that in mind, all right? We're kind of playing on this seasonality thing so far this year. I mean, we kind of saw the spike in early February and a decline through February into March. So this thing shifted just a slight bit, but this is consistent with what we got in the market right here. So it's just kind of a typical year for the market. It seems like it's not, but it is. All right. Keep in mind, these things, we're all just creatures of pattern, and we all work together to make this thing happen. This is a 20-year average, again, of the S&P 500 moves. Let's actually talk about what's moving today. S&P 500 was back above, but this, zoom it up real quick here. I know I got tons of lines on the chart. This move up, same size, just like on ES, like I was showing a few minutes ago. That gives me a little bit of caution that we might see a lower low. Just caution, all right? I'm not trading for it yet. S5FI, back above the 20 line. This thing can keep going, but it can retrace also. Can just chop down here for a couple days too. So doesn't really mean anything, but a reversal is likely to show up. ES, yeah, just chopping in the range. More sideways, stuck below the roadmap line. NQ, trying its darndest to break out right up here near the highs. We may see it push on up to that pink zone one more time, then retrace to the roadmap line one more time before we can run to the top of the pink zone. So big tech outperforming, and as I speculated yesterday, we may see money skip the financials and just roll into big tech, and that seems to be kind of what's happening here. So, but watch for a pullback. All right, Russell hanging out at the lows, not really getting off the mat yet, just chopping down here. There is a gap down in IWM today for those of you that are in my opening bell alerts. We're kind of watching for this potential gap down and fill to the close price yesterday. DXY continuing to chop in the area. If we can get that breakdown, we're probably going to run down into the 90s on DXY. Also, movers. FAZ getting a little pop since banks are getting a little hit this morning, getting a little pop. We're struggling though. We're kind of finding some resistance here. I'm not sure if we can get much run out here in the short term. FAS, this is the bulls getting a pullback, kind of building the bottom here. We may see it turn around. Bitcoin breaking above, like I was expecting it to get on up here, probably in the 32 to 35 area. Expecting at least 29. If we stop at 29, that's kind of bearish. We may get a deep pullback, but if we can break on up higher, get up to about 33 to 34, that's a very bullish pattern, and we're going to see continuation higher after a pullback potentially from this area. Like this may be the limit up here about 35, and we could see a pullback all the way back into this zone where we are now. So if you're trading Bitcoin, watch out for this move. Maybe consider lightening up and re-adding back here. It doesn't have to do the retrace, but that's the likely pattern. Mara getting a nice pop pre-market, up 843. This thing breaking out over this high at 857 can set this on the path to get up here in this $14, $15 area if it's bullish. If it's not so bullish, probably around 11, 12 area. If it just bounces down there, it's probably going to go lower than the $3 that we saw back here in December. So those are kind of levels to watch for Mara. FRC, going through stock twits for the next several here. Getting hit a little bit more, and making the news. They're talking about how they're going to bail it out or whatever, borrowing money. And it looks like the market just opened. And Riot getting an alert right there, breaking higher. Yeah, Riot breaking over this level can set it off for a run. Let me do that one really quickly. And the targets on Riot, 970, 10, and 12. AMD, more bullishness. Expecting it probably to peter out somewhere around this 110 level and get a retrace back down into this zone where it just broke out. Retest these highs right in here. Run up there, run back down before the next big move up. And it doesn't have to retrace, but that's just the most likely pattern. NVIDIA reaching on up. Looks like 330-ish might be in the cards. It does have a resistance right here at 265 that we're getting close to. Another 5 points up. XPEV getting a nice little bump, but still really bearish on the daily chart. FTX, nice pop. Might retrace that gap up though. And that's a classic roadmap line bounce. I need to draw some fibs on here. Yeah, right to the 1272. Can expect a retrace probably back to at least that high at 218. If it finds support there, it can run out to retest this resistance level up here. And we get above that. We get above this stuff right up here. It can start a bullish run. They obviously were sandbagging on their numbers and expectations, trying to get ahead and pop their stock. And doing a good job at that. That's management managing their stock price. So, all right. Let me read some comments here. Yeah, the stealth QE. So that's kind of what we were talking about in one of those. So just a minute, I'll circle back to that. All right. All right. Retraced right here. Popping on Microsoft. That's the next resistance up. CRPB. Working on getting above the roadmap line. BLDP. Down at the lows. PACW. Right down here. MSTR. Trying to pop with Bitcoin. Next resistance right up here. And Baidu. Still hanging out right in here. Got this resistance up here to clear. Coin. Hanging on the roadmap line. Above 85. Can set it on the path to get up to 110. VXX. Chopping right in here. NVO. Probably going to retrace to the roadmap line. Probably going to do that. GLD. Still on the path. 85 target. Or 185 target. 190 on the upside. Getting a little rally. Nice little pop. Oh, you know, GC1 exclamation point right here. Gold futures. Continuing the rally. Working on getting the breakout. Right there. Looking for a 2018 and 2075 on the upside there for gold to metal futures. And then another one, GDXU, potential reversal here. It's got to get above the roadmap line to make any kind of upside targets. All right. I know he said he took off in the chat, but let's pop back over and pull up some stuff on the Stealth QE. That was really what I kicked it off with. And grab the chart, pull it back over. Right here. This is the Stealth QE right here. Pumping liquidity. Now, JP Morgan estimating about $2 trillion coming in, getting pumped into the market through the different means, like bumping the FDIC. Like FDIC, just take the limits off the FDIC. That's $2 trillion of liquidity hitting the market. Now, how do you figure that out? Well, I've got a little liquidity indicator down here. Let's pull this up, pull this up, pull this up, and turn this on. And we got to flip back to S&P 500. Look right here. This green bar is when the liquidity is high, and it's going to pump into stocks. This thing has been pretty good for the last several months at picking the twists and turns. When this thing shows up green, go long. When it shows up red, go short. Like SPXS, SPXL, this liquidity right here. So we pumped about $2 trillion into the market with, potentially with the overnight repos, all the, they're not calling it QE, but it's basically stealth QE. They're doing all the tools that are pumping liquidity into the market, and it's about $2 trillion. So that right there is an indication that the market's going to ramp on this liquidity, and we'll probably see it run. May be volatile, but we'll see it run. All right. And if you want to know what that thing is, let me see what it's, pop it up, see what it's net liquidity. Oh, I can't remember what the devil it's called. Fed net liquidity. Yeah, right there, News Age Fed net liquidity. If you're interested in putting that on your chart, looking at it, works kind of like an oscillator. Inverses it. So as liquidity increases, it drops. It's kind of like an RSI, I guess. As liquidity dries up, it spikes up, and it highlights the red zone where it's potential for a reversal. So right there, somebody built that out. If we look back at the source code, it's interesting. It takes the Fred, it takes Wall CL, Fred Wertgien, and the repo, overnight repos, and does this calculation here, and then uses it in with the S&P 500's price, and it actually presents it as an RSI type situation. So you can pop in here and grab these, Wall CL, Wertgien, and the repos, and actually calculate this yourself if you wanted to see the net liquidity in the market. So interesting stuff. I think, let's see, I may have added it. No, I didn't add it. I had one that I built. It's probably on a saved chart somewhere. I thought I built one that would actually fill up the screen with it. Anyway, all right, everybody, that's it. I have a cautious. I don't think that they're going to let this thing rip or dip today. Between 39.50 and 4,000 is where they kind of need to hold it for the dealers to cause max pain to participants in the market for that $2.9 trillion OPEX. So that's what we got. All right. Any questions before we go? Going once, going twice. Continue the conversation in Discord. Have a great day, everybody. See ya.